Stavros Tousios for M4Markets, and today we're going to have a quick look at euro dollar and dollar yen, the last day of the week. So we ought to revisit and see where we're heading, especially after the CPI print. As you can see, momentum is increasing. We are going to overbought territories and we are on the 4-hour. Okay, just a little bit ahead of us, we have 109.414, which is the 50 Fibonacci retracement of the downside leg starting like last year. Okay, and at the same time, we have entered that territory over here, which means the next, potentially the next really strong resistance, if we manage to get above 105, is going to be at 111.12, perhaps 111.90, just before we head for the 61.8, the golden pocket at 112.79. The question is, can we get there? Well, for now, we are still in an accelerated trend because we're above this base channel, especially after we retested that. We actually came into that territory of the base channel again, but we even failed to reach the median line, right? So that means this is, of course, biased to the upside. If we look at this 1 and 2 relationship over here, we know we've gone overextended. And then since we have left a new low over here, the next thing to do would be to assume that as a potential five wave move to the upside. And that gives us a cluster around 1095. 1095 is then a very important level. Now, at the same time, if we look at the measure the move, which you can use the Fibonacci retracement tool, but in an opposite direction, we also get, let me just go close it, maybe on the 1 hour to see. We also get the 109 or so, which is the 162 of this particular move to the downside. I am measuring it by using that high and that low, okay? And I'm using the Fibonacci in reverse mode. Okay, so the main point being, guys, that as long as we remain in the short term above 107.78, which is over here, then this is to be seen as biased to the upside. Dollar yen now, when we look at dollar yen, we have identified this breakout last week, if I'm not mistaken. And we did say that, if we continue, if we remain outside and a potential retest over here, then probably we would go up. But we said that if we go back below within the channel, and then the chances are going to increase for a further downside, especially if we were to move below that low over here at 131.43. As you can see, we did see that moving up, okay, like this, but this overlap told us kinda at the initial stage that maybe this is going to continue to the downside. Now, I haven't done dollar yen for a while to see this corrective moment as well. Don't forget that when we see overlaps and markets are going into one direction impulsively and to the other in correction with an overlap, then that suggests there is more downside coming. So in this particular case, we have a move to the downside and an overlap in correction. A move to the downside, and probably we're going to see an overlap in correction now as well. And from there, likely to go further down. We have broken below the 130 as well, and the 130 is a very important psychological level, which means the next support, the next major support, is at 126.50. This is still a few, I don't want to say miles away, but this is still a few pips away from where we currently are, 200 pips at least. Okay, what else we want to do, because this is supposedly 1 to 3.5 here as well. If this is indeed a 5-wave move, because we are counting the 5 waves, then we could see this extend down to around the 100% of that. And that is down at 119, closer to 120. And you might ask, well, that means that it's going to be a big drop, and this is going to be a surprise. It's not going to be such a surprise, guys. I mean, look at where we were. Okay, a year ago, we were, hold on there. We were down at 114, so we're still a lot up in comparison. Now, down on the 1 hour quickly, you see that we still don't really see any signals apart from this 1 hour sort of signal. That it doesn't show a signal, it just shows them some weakness to the downside, which suggests that we might indeed be in a last leg to the upside before we see some correction. So the 5th and correction, and probably then further continuation to the downside, as long as we remain like below the 50 and 61.8, which is around 131, 132.20.